Good day and welcome to the Q3 FY2024 earnings conference call of Star Cement Limited, hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone telephone. If you wish to please note that this conference is being recorded. I would now like to hand the conference over to Mr. Dharmesh Shah from Emkay Global Financial Services Limited. Thank you, and over to you, Mr. Dharmesh, sir.
Thanks, Mano. On the call, we have with us Mr. Tushar Bhajanka, Deputy Managing Director, Mr. Vinit Tiwari, CEO, and Mr. Manoj Agarwal, CFO of the company. I will now hand over the floor to the management for their opening remarks, which will be followed by an interactive Q&A. Thank you, and over to you, Tushar.
So, good afternoon, all. My name is Tushar Bhajanka, and I'm the Deputy MD of Star Cement. I would like to welcome you all to the earnings call of Quarter 3. I have the CEO and CFO of the company with me. The CFO will give out the numbers of Quarter 3, and then we can have a Q&A session. Thank you.
Yeah. Hi, friends. This is Manoj Agarwal, CFO of the company. I, on behalf of Star Cement Limited, welcome you all to our Concall for discussing our number of Q3 FY24 and followed by 9-month number for the period ended December 23. I would like to clarify that we are discussing the historical numbers and there is no invitation to invest. Having said that now, I will just take you through the Q3 numbers followed by 9-month number. Starting from clinker production, during the quarter ended December 23, we have produced 7.37 lakhs ton of clinker as against 7.39 lakhs ton same quarter last year. So far as cement production is concerned, we have produced 9.82 lakhs ton this quarter as against 9.22 lakhs ton same quarter last year. Now I will take you through sales volume. During the quarter, we had sold 9.6 lakhs ton of cement and 0.03 lakhs ton of clinker as against 9.08 lakhs ton of cement same quarter last year. There was no clinker sale last year. There is a growth of 7% in cement sales. That is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 7.32 lakhs ton as against 6.62 lakhs ton during same quarter last year. And as far as outside Northeast cement is concerned, we have sold 2.38 lakhs ton of cement as against 2.45 lakhs ton same quarter last year. In terms of blend mix, it is 10% of OPC and rest is PPC. These are the quantitative number of the quarter. Now I will take you through the financials. The total revenue figure this quarter is around 655 crore as against 629 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA of 153 crore as against 120 crore last year. Profit after tax is 74 crore as against 53 crore in the same period last year. On per ton EBITDA basis, it is 1576 during the quarter as against 1324 per ton same quarter last year. This is what our quarterly numbers of quarter. The total revenue figure of the 9 months ended December 23 is around 1975 crore as against 1769 crore same period last year. As far as EBITDA figure is concerned, during 9 months ended December 23, we have done an EBITDA of around 395 crore as against 342 crore last year. That is 207 crore as against 151 crore in the same period last year. On per ton EBITDA front, it is 1304 during the 9 months ended December 23 as against 1229 per ton same period last year. These are our quarterly and 9 months ended figure. Now I would request all of you that you have any query, then I will request Dharmesh to moderate the query wherever it requires. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Shravan Shah from Dollar Capital. Please go ahead.
Thank you, and congratulations on a good set of numbers, particularly on the profitability front. Sir, before asking questions on volume and the pricing and profitability, first wanted to understand in terms of the our expansion and the capex. So our 3 MTPA clinker at Meghalaya were supposed to start in February, and 2 MTPA Guwahati were supposed to start in December, and Silchar to obviously in September. So what's the new timeline when these 3 units are going to start?
Yes, so, the Guwahati grinding unit, we've already started taking some initial trials, and we should be commissioning the plant on the 1st of March next month. For the clinker plant, we will be commissioning the clinker plant on the 31st of March next month. And for the grinding unit in Silchar, that would be about August to September next calendar year.
Okay, and any specific reason why there is a delay for this clinker and particularly the Guwahati grinding unit?
Yes, so I think it took us more time in the trial, and to and some of the critical delivery of a few of the machinery, and that is why we got delayed by a month. But I think we have already started taking the trial, and I think we are all set to commission the plant by 1st of March. I don't think there's any difficulty in that.
Okay. Secondly, in terms of the capex for all these 3 specifically, so clinker, we were supposed to do a capex of 1,300 odd crore, for Silchar to 500 crore, and for Guwahati 450 odd crore. So out of this, how much capex we have already done, and what is remaining to be done in the 4th quarter, and what about the next year FY25 capex?
Okay. So in Guwahati, we've already, till December, we had spent about 330 crores, in erecting the plant. There is a capex of about 55 crores more that we will be doing in quarter 4. This is for the Guwahati plant. Our expected cost, the capex that we thought for the Guwahati plant is now coming to be lower than what we had estimated earlier. So we had estimated, I think, about 430 400 crores.
Sorry, yes sir, go ahead.
Yeah, so I was saying that the capex that we had thought for Guwahati was about 430 crores. We are going to finish the project, and below that amount, the capex should be about 385 crores. 330 crores is already spent till December, and 55 will be spent in quarter 4 for this year. This is Guwahati. In Lumshnong, the capex was about 1,300 crores. We had, till December, we had already spent 850 crores. In quarter 4, we plan to spend about 200 crores. And in quarter 1 of next financial year, we'll be spending about 200 more crores. So in total, we plan to complete the Lumshnong clinker project in 1,250 crores versus the 1,300 crores that was expected.
Okay, and for Silchar, so the cost was 500 odd crores. So how much we have spent, and is it also revised down?
Silchar, we have just focused on buying the land till now. So we have spent about 20 crores in total in just buying the land, and we are taking out the permission. I think because cost of steel and 2-3 other items have reduced, so we would revise the capex downward from 520 crores to I think about 450 crores. But I would need to confirm that with the team. So that would be confirmed in the next investor call.
Okay, got it. Now on the volume front, so we were looking at 13 to 14% kind of volume growth for this year, done 9%. So the ask rate for the 4th quarter is close to 22 odd %. So what's the revised number for the volume for this year? And once this Guwahati and clinker will start. So next year, how one can look at in terms of the volume growth?
Okay. So, Vineet Tiwari this side. So, as far as growth is concerned, what we anticipated, the growth in quarter 4 was not in line. I think the industry growth was quite subdued. And we can relate it to because the quarter 1, which normally monsoon, which sets in early in Northeast, didn't set early. So, first quarter was almost 25% industry growth. Quarter 2 industry growth was almost flat. And in quarter 3, Northeast industry growth was pretty subdued to around 3% level. Vis-a-vis that, we've been able to, in Northeast per se, we will talk about, we've been able to grow by close to 10%. And as an organization, 7% because of the outside Northeast factor. Going forward, if we are looking at definitely the growth, somewhere we are expecting in quarter 4 to be in line with somewhere around 5-7% maybe for the industry, and we expect to grow again close to around 8-10% in quarter 4. As far as next financial year concerned, since we are coming up with a 2 million ton Guwahati, which is all trial production as informed by the Deputy MD that trial production already started. And for all purpose, that plant will start giving us material from 1st of March. So next year we have this 2 million ton extra. I think we were quite strained for material during the year. If we talk about logically, we will sell every ton of cement every ton of clinker will get converted to cement, whatever we have produced this year, and we will be able to sell that before 31st March. So next year we have additional volume, so we look forward to a pretty aggressive growth. As far as Star is concerned, we will definitely look forward for a pretty aggressive growth, and we are very sure of doing a growth somewhere in the range of 18-20% next year.
Okay, that's great. Second, just a couple of data points. Premium share for this quarter, lead distance, and how about the profit prices in January until February?
Okay, so if you talk about pricing, so in case of Northeast, there has been an improvement in the pricing. Although outside Northeast, there is a drop in the pricing. So in Northeast, in quarter 3, we'll talk about per se, and the pricing has improved by close to 7 rupees. But outside Northeast, like in Bengal and Bihar, there is a drop in prices, almost by 15-20 rupees drop in Bihar. And similarly around 20 rupees drop in Bengal. So this is what we have seen vis-a-vis quarter 2. As far as the premium percentage is concerned, so we have our premium percentage has improved to 6.5% vis-a-vis 4.5% of the same quarter last year. And the growth in premium in quarter 3 has been 47%. That has been the focus area, and the growth has been reasonably well there.
Yeah. Go ahead, sir.
Lead distance has been 215.
Okay, and trade share was how much for this quarter?
Come again?
Trade share for this quarter was how much, and our Kcal fuel cost?
Okay, 87%.
And Kcal for this quarter, fuel cost?
Fuel cost for this quarter has been 1.75.
1 point. And for next quarter, do we expect some further possibility of reduction?
We expect to be around 1.7.
Okay. And fuel mix for this quarter, third quarter, how much was contracted coal, Nagaland, biomass, and FSA?
FSA was around 12%, biomass was around 7%, Nagaland was 26%, and the spot auction coal was around 55%.
Okay, thanks.
It was around 7% in Glynn and for MP around 13%.
Okay. Thank you. And lastly, for net debt, if you can give the number. Net cash as on December.
Yeah, so currently we are about 116 crores in positives, so we do not have any debt. But what we see is that in quarter 4, we would have to take a debt of about 150 crores. And in quarter 1, we'll have to take a debt of about another 100 crores. In total, by end of quarter one, we'll have a debt of about 250 crores, which would need to be paid in the coming quarters after that.
Okay. Thank you and all the best, sir.
Thank you.
Thank you, sir. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Mahesh Bardang from Centrum Broking. Please go ahead.
Hi, good afternoon, sir, and thank you for the opportunity. And congrats on good set of numbers. Sir, my question is on the market size of Northeast. So, we are adding 2 million ton now and another 2 million ton grinding unit later in, say, in 2025. So how fast can we ramp this up? Do we have to aggressively take market share from incumbent players to get that kind of volumes? Or do you think that basically that if the region grows at, say, 7 to 8% or even 9%, we would still be able to ramp up the plant faster?
Okay, so if you look at Northeast, there are players who are coming from outside who sell close to around 1.8 to 2 million tons of cement comes from outside via rig players who dump cement in Northeast primarily.
Right.
Then there is a natural market growth, and from the Star perspective, if you will look at, we are very high on trade. So non-trade has been one segment which we have left. Further non-trade, there are big projects which are coming up in Northeast, which you all must be aware about, are getting announced. Some hydropower projects are coming up. Some big bridge projects are coming up. So we expect that the institutional demand, which was also good in the recent past also, and should remain good and buoyant. And that is a segment which is slightly untouched for us. We will be getting aggressively into that segment. Secondly, if we look into going forward as far as the volumes are concerned, we have these outside players whom we have not competed with. Reason for that has been the volumes which we had. We were selling that volumes. So we have opportunity to compete with them and to take that share as well. And lastly, surely, we have to take our market share from the existing players also, because that's where our volume will come from.
Okay. And sir, the related question to that is basically we have seen that the demand in the eastern region, specifically in Bihar, West Bengal, Jharkhand, has been very low, and that has resulted in, since October, we have seen pricing slide in those regions. So has that influx increased compared to earlier, from east to northeast?
No, I will not say it has increased. Rather, if we talk about the recent past, it has decreased because rake availability also gets challenged at this period of time. So the 2-point rakes availability has been challenged. So I think the influx, if we talk about the recent past, it has been lower. Yes, it increased over the year. If you talk about, there is an increase over last year in that volume. But in this quarter, we don't see that to be on a very high side.
Okay. And sir, I think last quarter we did our fuel cost was around 1.9 per kcal, and which has come down significantly to 1.57. So what changed? What was the key change here in terms of what led to this decline?
It is 1.75, not 1.57.
Oh, it is 1.75. Okay.
Yeah.
Okay.
So we informed last time we have an inventory, which now with the coal prices going down, the inventory is going down. Of the lower price inventory is coming up, so that's how it is placed.
Okay, sir. Thank you. I'll just come back in queue if I have a question.
Thank you.
A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Chirag Sidhwa from MK Global Financial Services Limited. Please go ahead.
Yeah, thank you very much. Am I audible?
Yes, sir, you are audible.
Yeah, so just a couple of questions. First, one is our longer-term targets. So in the previous call, we had indicated that post our commissioning, the current capacities, we are eventually targeting a 20 million ton kind of a thing in the next 10 years. So any color on the same? Have we kind of indicated a roadmap or something on that?
So I think we are still working on it, but I think we've progressed fairly well in that direction. So we are, currently working out on a mine in south and also a mine in north in Rajasthan. And I'm still unable to share the information because I think we are still in the talks. But it is going to be a greenfield expansion. We'll be buying the mines and then we'll be putting up a plant. Or we'll be getting mines and auction and then we'll be putting up a plant. So I can't shed much light right now because it's a bit at the moment. But I think by next quarter we should have possession of at least one mine in either of these locations, and we can then discuss more in detail about how we plan to grow. But yes, our target remains that in the next 7-8 years we'd want to be a 20. By end of this decade, we'd want to be a 20 million ton company or more.
Sure. So mostly it will be kind of an organic expansion, not looking for inorganic at the moment.
Yeah, because I think most of the inorganic opportunities which are floating around in the industry are very big for our size. Some the smaller players, in South are at the moment not willing to sell, and there's no small player left in Rajasthan or East. So from that perspective, we are focusing on growing organically. Of course, the mines may be bought inorganically, but then we'll put up a plant in those locations. So this is what we are working out on, and this is broadly what we are progressing with.
Sure, sir. That was helpful, sir. And one more question, sir. While our grinding unit is being commissioned 1st of March, while our clinker unit is coming a month or so later, so where are we planning to source our clinker till that period, during that gap? Because if I'm not wrong, our clinker capacity is more or less utilized at optimum levels. So till that time, till our clinker gets commissioning and gets starting, from where will we be sourcing our clinker for the Guwahati grinding?
Okay. So if you look at as Deputy only informed that we are expecting 31st March our clinker to start. So it's only a matter of a month, 45 days. And I think we have conserved clinker during the year to take care of our production from that unit in the month of March.
Yeah. So we have about 1.8 lakh tons of clinker stock right now, and our kilns are producing at full capacity as we speak. So we do expect, the stock to help us in running our new plant as well. Of course, the new plant will also not run at 100% capacity from the very start. It will take time to ramp up because of the plant as well. So I think it should not be a problem. And, in April, our new plant should start producing. So then the clinker shortage will not happen in any which way.
Okay. Sure, sir. And so just lastly, if I may, on the prices, we saw Northeastern region witnessing 7 to 8 rupees kind of a price increase in the third quarter. So what have been the trends for the month of Jan from Q3 exit levels? Are there at similar levels or have we seen a decline? And similar for the other eastern regions from Q3 exit in the month of Jan? That'll be it.
More or less it is in a status quo situation. But in quarter 4, we may a 5 rupee a bag price pressure on prices may be there. But more or less till now it remained stable as it was in December.
Okay. Sure. Thank you.
A reminder to all participants, you may press star and 1 to ask questions. A reminder to all participants, you may press star and 1 to ask questions. We have our next question from the line of Uttam Kumar from Axis Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, sir, and congratulations on very good set of numbers. My question pertains to Siliguri unit. So, sir, what was our capacity utilization during this quarter for this unit?
Our capacity utilization was around 47-48%.
Okay, sir, and how do you see this panning out in quarter 4?
In quarter 4, it will be better. I think it should be at around 52%.
Okay, sir, because normally, sir, this plant has not been operating more than 60%. Last March, it was around 60%. So when can we see the capacity utilization of this plant moving ahead at over 60%?
We did not try to grow in East, outside Northeast much because we had a shortage of clinker. And outside Northeast is a low price zone for us where we do not earn as much margins because one thing is the price reduces and the second thing is that the logistics cost is also high for us. So our margins are very low in outside Northeast. So that's why, we never try to utilize our remaining clinker to grow outside Northeast. Once we get the clinker plant, we'll definitely start pushing our material outwards as well. And then we can see a better utilization of LCU.
Okay. And sir, we were also looking to develop logistics for fly ash transportation for the Siliguri unit. So what is the status on that?
The project is underway since it requires some permission from railways. So the work is on and very soon we are expecting those permission to come in. Once those permission comes in, I think then we will be able to place the orders for those wagons, and which has a lead time of close to 10-12 months to get. So we are expecting that project to get commissioned by April next year only.
Okay. And sir, what is the status of AAC block in Guwahati?
That project is also on. I think the land work has been completed. Machinery, all orders have been placed, and we are expecting that project also to commission by August.
Yeah. This financial year?
Yes, this financial year.
Okay. And sir, what is normally margin that we get in AAC by selling AAC blocks?
So, the margins in Northeast are very healthy because right now there's a shortage of AAC blocks in Northeast. The capacity that we're coming up with and the technology that we're coming up with will allow us the margin of about 25%, and the ROCE of that project would be about 20%.
Okay. And sir, you said premium cement is around 6.5% this quarter. So how do you see this premium cement portion of premium cement moving ahead? 10-15%, and in how much time you are planning for that?
I think premium agenda is one of our core agendas and rather one of our biggest agenda for our volume push as well. So from where we stand today, we look forward to double ourselves by the end of next financial year.
Okay. Okay, sir. That's all from my side, and all the best to all of you.
Thank you, sir. We have our next question from the line of Aditya Chheda from InCred Asset Management. Please go ahead.
Hello, good afternoon. So I have two questions. One, if you can quantify the incentive structure which you are supposed to accrue from the new plants which are due to commission soon, and if there are any other internal efficiencies which are going to help the overall EBITDA per ton for the company, and if you can quantify the same for me.
Yeah.
Thank you. So, these are the only questions.
Yeah, so I think good question. So basically, we are supposed to get a SGST benefit in Guwahati, the new grinding unit. So first, we'll have to adjust the input credit of the capex that we did in Guwahati plant. That so if we suppose commission the Guwahati plant by 1st of March, then the first 2 to 2.5 months it will take to utilize the input credit that we'll get